Good afternoon, Scott Redler, T3 Live. Welcome to today's Fed recap. So, market rallied 2 days before the Fed, broke us out of that wedge slash pivot slash whatever consolidation pattern. And then, today, Big Ben came out and started talking about how the economy is getting a little bit better, which is positive, how some of the risks have been removed since autumn, which I think was different, and that he obviously doesn't think we're going to be raising rates till some point maybe after 2014, but it feels as if they definitely alluded to the pace of purchase being less, which is what we thought about. And we also thought that it could be September, which is what people started saying in the afternoon, and that's when the market started selling off. So with that said, the question is, again, after a 15 to 18% move that we saw in the S&P and the NASDAQ and the huge move we've seen for multiple years, okay, was that 5% correction enough? Are we strong enough to continue this current trend, which is pretty pent up considering, again, we're only about 3.5% off the highs now, not even, okay, to make new highs for a sustained move throughout the summer into the fall. So, common sense says it would be nice, actually, if we got the corrective activity because, you don't have to carry as many positions on an intermediate basis. You could enjoy your summer and let there be volatility, and we could do the test the levels game. Test the 50-day moving average again. If we fail, load up short. Look to see if the 100-day holds. See what sectors act best and kind of correct a bit more than 5% to get that anxiety out of the way. So today we came in and we said to ourselves, okay, 1642 to 1648 was the level to get back above, to kind of get ourselves back in portfolio approach. Maybe in the spiders you could think about 165-ish or 165.20. Really the breakout in the spiders was 165.20 to 165.40. But we gave it a little leeway because obviously with the machines in Fed, they were like 164.5 to 165. That would probably be the level that if we go back below, we're right back in this range. And if you're actively trading and you're a professional, no need to really be in these things. If you're a macro investor and you have room and you're not looking at these things day to day, be looking at them once a week, and I still think you stay the course, things are fine. Okay, even if we don't hold the 50-day the next time. So with that said, I came in long. I came in today with like 6 longs. I'm in a spider short, and I leave today just short gold. But anyway, I did get stopped out, and I tried to be as transparent as possible, on the feed. Everyone in the VTF gets to see my positions leave when I get stopped out. You guys, it's hard because it's a fast tape, so I want to tell you guys, but it's again, we put everything together for you to connect the dots, between off the charts if you're not a virtual trade floor member, then the price point sheet, and then the morning note that kind of tries to tie everything. But really, the virtual trade floor is where you get to see everything implemented. You also get to hear the thoughts. Okay, if you're not a member of the virtual trade floor, you can't afford it. I understand. That's why we try and give you an overview of what we're doing, why we're doing it, and then you just have to execute it and follow stops and do your own executions, here and there, which everyone does anyway. Even people who follow us on the virtual trading floor, they see our positions, but they understand why we're doing it, and then they imagine themselves. Sometimes everyone in the community manages it better than myself for Sperling or Evan or who knows. That's why we have a great community and we rely on each other in order to point things out to create, value added. But anyway, you go to the chart of the SPX, you'll see, or just say this is the spiders. Take this out of the way. This was, prior, okay, when we drew that wedge. So I'll make it a little bit bigger here. So, this is where we're at today. Okay, we are. This is the trend from November coming all the way up. Okay, which didn't even really get down to, then the re-energized trend here, this is what we drew that connected the 50-day moving averages. This was the one when we corrected in April. Here's that topping tail from May 22nd, the last time the Fed spoke. Okay, and then, this was your little breakout here. Remember, we talked about breaking above this area could give us room back to the highs. Well, let's take a close look here, okay? First things first, you trade, everyone trades differently, okay? And here, remember 164.67 was a price that perhaps you got squeezed if you were short. Then it poked, and remember Monday was like that doji but stayed above, and then you had a clean move all the way up to 165.99 yesterday, okay? So really, 165.20 to 165.40, if it wasn't just a Fed day, would have been, a pretty big line in the sand for, active guys. So, the chart that we posted, I really talked 164.5 just because if we broke below that, we're back below yesterday's low. This was yesterday's low, 164.52. That's why we came up with that level. So I show you that it doesn't come out of the trees. And then this level here was 163.55, which we tried to hold on to. We basically gave up that 8 and 21 day on the close. And then here is that 50-day again. So what is it going to do this time? As of now, you still have the outside day, lower high. You have a breakout failure, almost another pretty much potent engulfing day. So tomorrow's going to be interesting. Okay. Sometimes you get, if you come back to me, you get the reverse of a Fed day the next day. So there are some people that say that will go out very short because their momentum, they're looking for follow through tomorrow. But some say, okay, they always try and get you on Fed day. The Fed really didn't say anything different. We all want to hear a stronger economy. We all knew the pace of purchase is probably going to change come September, October. So what's the big deal? So with that said, we could open up a little bit tomorrow. So for me, I said, you know what? It's a summer. I'm going to be tactical. It's been a good year so far. We're almost halfway done. I'm going to let things sift. I'm going to actively trade. I'm going to look for good setups, take them, leave them, love them, leave them. College, no, I'm kidding. That never happened in college. But, just be a little different. And, at this point, today's bar could give you a brushback pitch. If you listen, if you don't, watch your computer screen every day and you're a doctor or a lawyer or a teacher or a fireman or whatever, and you're like, I'm in some good stocks that I like, let them go. Just be in a little less. If you're a macro investor, again, don't be cashing in your 401ks, your 529s, whatever. Keep your monthly flows. I think this, will work itself through. It's good that the economy is getting better. But right here, again, is that spot where the professionals and the media are going to try and figure out, do we hold the 50-day or do we go to the 100-day? You go back to the chart one more time. Let me put that 100-day in, which I don't want to get ahead of ourselves, okay? But I just want to, I want to have that 100-day because that's the next area if we do see it. And that comes in all the way down here, which was that other breakout. So, the question is what's going to, actually there it is right there. So here we are. First things first, if we open up, we got to get through today's low. We open down, we got to see what happens at the 50-day. Plus also you have quadruple witching on Friday, so that might, bear some weight. So let's go through some things. XLF, you can't be so bearish on the XLF here because all it did is not have enough strength to penetrate the downtrend. Okay, so we'll see how it handles this. Okay, all this tells you is that actively, if you're playing for momentum, you don't stay in. If you're playing for an intermediate trade, you could be in some, or you could just say, I'm going to give it some time. If you're playing it for an intermediate short, it's got to break this small uptrend in order to come down and test a 50-day. Overall, in the beginning of the day, Goldman was pretty negative. So that gave some clues that maybe we wouldn't go. The bank strengthened a little bit in the afternoon. I was playing JP Morgan and Bank of America, but here's a micro little range. Here's your inside 2 days, it broke below. Okay, and now we're here at the 21-day, so we'll see what happens here over the next few sessions. This will give us some clues if some weakness comes in. It's still well above the 50-day. I'm not going to get into the other banks, but let's just do JP Morgan. JP Morgan, it tried to break above. If we were in a strong tape, that's the reason why I was looking there. It pushed through, didn't have enough strength. It's still above the 21-day. It's still in this wedge, so this is just a minor reason to perhaps lighten up a little bit, but you have to see what happens the few days thereafter. You go to real quickly the TBTs, which we're trying to show everyone that no matter what the world thinks that rates are going to go up, trying to break above the 70. This is something we've talked about putting in the drawer. 6 to 12 months from now should be close to 80. Same thing with the TLTs to the downside. Trade's very tough, but overall you do have this head and shoulders top pattern, with the left shoulder, the head, the right shoulder. Here was your support on a lot of different levels. It broke below it. But again, it's pretty extended from all the moving averages. But overall, we do think at some point next could be 3, 6, 12 months, 100. So that's part of a more macro thesis. Real quickly, gold. Many times you've had some choices to make here. First one was on an intermediate level right here when it broke this triangle right around 161. Boom. Next time was right here when it broke this macro level going across around 149.5, and now closing at dead lows today. Guys on the side were talking about it. They were starting to short it. They're like, Red Dog, why aren't you in it? And I'm like, you know what? I probably should be in it, right? We're right back at the low, okay? And if you think we're going to break below to get to the 126 to 128. It could happen overnight, and if it opens up, maybe you short some. So you look at the volume today. We go to basic studies, go to your volume. A little bit of volume today, so it's sped up, and again, it's below all these moving averages. The trend's been lower, so the good book would say to take some home short. And I don't have like a crazy thesis about gold, like in the past when it was at 850, I said I can go to 1500 and then 1800, whatever. And then 3 times this year, we just talked about adjustments for anyone who was bullish or anyone looking to be short, and that was at 161, that was at 149.5, and now here we are at 130.50. So we'll see how it reacts tomorrow to this level. It could try and bounce, maybe it doesn't. As far as high beta, Google and Netflix were strong. They pulled in a little bit off the close, but still look okay. There's still things that look okay, individual stocks, even though today we had a pretty potent down move. So we'll see what happens in the next 1 or 2 sessions. This type of action gets me more neutral, back to tactical. And if we were to hang out here the next day or two and get weaker, then maybe I'll put on some swing shorts if we break below the 50-day this time and hold below it for that move to the 100-day. But at this point, we don't know that's going to happen yet. Unless you have a thesis for it. For me, I don't have a thesis for that. I just have, okay, now we're not above the mid-end of this pivot. We're not above 1648 or 165-ish where I feel like I need to be in a portfolio approach. So I'm back to tactical. I'll figure it out. If traders lately are feeling more like politicians because they keep changing their minds, but that's what we do as traders. We change our minds because we're not stubborn. We read the price action. Things change. We change. And then overall, we measure levels with sectors without opinions. We just try and use a little common sense. Hopefully did okay today, and if you lost some money but you got stopped out, at least now you're back in control of your keyboard and you can figure it out, versus just sitting there and being in harm's way, which there's no reason for, especially considering it's June and it's time to pick your spots, make a little bit of money, but enjoy the summer as well. I'll see you tomorrow morning at the morning call. Have a good night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.